back. Well, the Construction Confidence Index rose to its highest level in 3 years, gaining 4 index points to reach 42 during the third quarter. The rise in confidence was underpinned by improved activity levels and offers signs that the construction recovery is gaining momentum. Joining us for more insight on the numbers is Cees Bruggemans, Chief Economist at FNB, and Nerina Visser, Head of Beta Solutions at Nedbank Capital, still with us in studio as well. Cees, so very encouraging that we've got these numbers showing an improvement. What does it actually mean, and how excited should we be getting about this?
Well, the index, both of the confidence but also the activity levels, show very distinct rising tendencies already for some time. We now have 42% of contractors indicating confidence, which is double the level of early last year when it was at its low point of 21. It is a very consistent improvement that we see taking place over the last 18 months. So I think the message is very real, that what we see coming through. Construction has seen its low point and is very much in a recovery phase.
Cees, where does it sit in an economic cycle? Give us an academic lesson here, Construction 101. We've seen a 2-year, let's say we've seen a 2-year rally in the construction sector. Does that normally mean that it leads the economy out of the doldrums?
Nothing is leading and nothing is lagging normally at this point in time. The economy turned as long ago as early 2009. And of course the construction sector is primarily an infrastructure story, therefore primarily public sector. And the public sector has had its own problems in the way it bunched projects nearly 10 years ago, then found it couldn't carry on, and it essentially had a long play out trying to catch its breath. And now we find in the last 18 months that apparently they have some scope, and it is starting to come through in terms of order levels, and the construction companies are showing it. So I wouldn't link this particular construction experience primarily with the business cycle. It is ultimately a reflection of what's happening in the public sector.
Yeah, that's very interesting, Nerina, because we talk about the construction industry and, you know, the kind of troubles that it's being plagued with, you know, and lack of work coming through. It's interesting that you've got to make this distinction between public sector work and private sector work coming through, especially as we approach the medium-term budget come next week, 25th of October.
Yes, I think what we can read into the Construction Confidence Index numbers is that the order books are there, that's filling through. That does not necessarily translate into good earnings for our construction companies. They still have to deal with some real issues in terms of the rising cost pressures. Construction is notoriously thin and narrow margins and quite sensitive in terms of that. So I think it's important that we differentiate between what happens in the economic activity versus what happens in the sort of financial performance of the construction companies.
Quite right, Nerina. I mean, in fact, if you look at Cees's report, and Cees, you can comment on this, please. It says, however, despite the increase in activity and the more relaxed competitive environment, profitability came under renewed pressure. And this is your quote, Cees, input prices are rising faster than tendering prices, and this has continued to squeeze profit margins during the third quarter. Dangerous situation for construction firms. I know on some of the bigger projects and some of the bigger companies I've spoken to, when they've produced their results, they're saying actually on some projects they actually take losses from the time they sign the deal to the time they complete it.
Yes, by all means, but you have to start somewhere, and in that respect the activity levels lead. And I would say that improvement in margins will come in time. I mean, it's very early in the cycle at this point, given the promises that we see on the infrastructure demand side. I mean, there's huge potential there in coming years.
Cees, what's very interesting is, you know, where we've been waiting for the cycle to turn and waiting for data to reflect this kind of momentum in the construction sector, we've got things like constraints coming to bear on the construction sector, most notably the shortage of skilled labor, and then you've cited as well shortage of building materials. How do you see this denting these prospects moving forward? No,
I don't see them denting, I see them stimulating. In other words, we have been through these cycles before. These companies scale down when they have to. And then when they have to turn around and then find both the labor resources again and the materials, then it takes time to adjust. We have seen this sector doing remarkable things with its labor over time. If you go back 8 years specifically, when people actually didn't believe there could be a recovery, and there was a substantial recovery. Just the mere fact that they are indicating that they have difficulty finding the right kind of people should not come as a surprise, but they have shown they have the capacity to overcome that.